It's the Market Sniper here to talk to you about gold and explain to you why you may actually be looking at sideways and downside for a little longer than you think. Macro, bull. Medium, long time frame, a bull. But short-term expectations are far too high. We have Reval fever. We'll be talking more about that. Let's do our breakdown on the monthly time frames. So here is the monthly. People have got to remember the blow-off trade tariff tantrum was an exceptional event that led to a real blow-off, and you faced yourself come on down from the 3.5 all the way back down to 3,288. That was the better part of $200 rejection. Then after that candle, let's make it a bit bigger, shall we? Let's pull it all in. We're talking about recent monthly conduct and the candlestick charts as you see them. Make them bigger, make them bigger, make them bigger, let everybody see. So that was 3,500. Our official thesis is that's actually going to be a localized high for a little longer than most think. That was a big pullback and a pushback on what was a blow-off period. We'll touch on that more when we drop the time frame. Here you'll see a rickshaw boy. That is a long wick top and bottom, and a very small body. That typically points to indecision and quite a degree of volatility. What that also says is that you had a big rejection from that point all the way back down. We've got to remember we're focusing on the highs. You've just come off a month. Remember a month, that was April, where you rejected the better part of $212. This part was, let's take the high for you, on the following month, which was May, was the high of 3,435 down to a close of 3,289. So you closed at 3,288 on the month of April. 3,288. In the month of May, you closed at 3,289. You gained $1 for a month of trading with a whole bunch of volatility and a 50% rejection from your open after your high, which was at 3,435. The next candle, which is now the month of June, had very little to the downside, but represents a shooting star-esque, very similar to, close to a localized high, went all the way up to 3,450. You can see it there. Came all the way down and closed at, wait for it, this will shock you, closed at 3,303. So let's get this straight. We've had 288, 289 and 303 with 3,000 in front of it as your closing levels. 288 to 303 is $15. 3 months with $15 on your close, with a rejection in the final week of those months. Let's see how we do as we shift over to July. July, again, almost made 3,550. I think it measured 3,440. Let's get a number for you. High is 3,439, 3,440. And you closed at, wait for it, 3,290. So let's just do that maths again. You closed at 288 in April. You closed at 289 in May. You closed at 303, just $15 away from your lowest at 288 in June, and in July you closed at 3,290. So you have 288, 289, 290 and 303, not in that order. All within a $15 range. You have 4 separate months of closure within $15. Most aggregate number would be around 1992, thanks mainly to the 303. 88, 89, 90, 303. That's it. And we were warning that if you didn't get away on that last breakout and the rejection was strong, you may not get a breakout as soon as you think. You may go sideways, even a little bit down for a while, but that's okay. Macro good. Since then, this was all green when we were talking to Mario and Clive. It's already relented 50% almost of its move. since the CPI number came in today, you have been rejected to the current level of 3355. We are the 12th of August, halfway into the month. The second half of the month, not yet started really, especially the last week, is typically where a lot of that rejection has occurred. So currently the high so far has been 3409. 3409. It is lower than the other two recent ones, the other three recent ones, the other four. It's admittedly only half the month. You are actually trading higher than the closes for all the previous months, but we are not at the month end. So our concern is that there is real selling. And in actual fact, if we were to have a look at those closes, it is almost uncanny how tight the range of closes have been so far. 288, 289, 290, 303. That's your month, and that's the haircut you've taken each time you've tried to stay meaningfully above the 3,400. And what, you might ask, does YouTube say? YouTube says, revaluation gold, 4x, 5x, 6x, 20x, $40,000, $20,000, $15,000, Reval gold. Reval gold, peak Reval gold. It's incredibly clickbaity, by the way. Channels far smaller than ours that have been around far less than ours got 61,000 views in 12 hours for suggesting 15,000 upside Reval by decree. And please understand this, a mark to market acknowledging a current asset valued at 4422 that hasn't been updated, and recognizing the existing price discovery mechanism that we all value our gold at, which will say 3,350 odd, and making it that is a mark-to-market move. It is not an upside revaluation. It is just admitting that the dollar has lost in 54 years, 8.4% compounded every year, which is why they want to think real hard about doing that, because they hate admitting that they are inflation taxation thieves, and that in actual fact, $1 bought you more than $79 does today. $1 54 years ago bought you more than 79 today. That is the cost and consequence of an 8.4% compounded average loss in buying power that takes you from 42.22 to a number like 3,350. It is 79x, my friends. It is 79x, and that's what's happened. Your dollar is worth 1/79th of what it once was. That's where you are. Note the views, note the views. It is exciting times, a lottery. Wake up rich the next day. Your government's going to do that for you. They love you. Not. Every time major significant revaluations have occurred, history has shown us that they don't want you to be participating. They want the good stuff for them and the impoverishment for you. They want you to give the gold back. They want you to sell it. They want you, under force of law and fine previously, they made you give all your gold away and then they revalued it. You say they wouldn't get away with that today. Well, how about unrealized capital gains after they mark to market the gold? And if they ever were to try a 4x, 5x, 6x on that scale, they would blow up the derivatives market. They would push the gold-silver ratio to all-time highs, which the silver would subsequently start adjusting very, very violently and quickly. All the silver shorting banks would go bust, and as a result you would have a system of a down, which is indeed possible. Only problem though, those banks own the Federal Reserve and the entire political system and fund it, and are owned by the same they, and we're not going to say anymore who they are, the mercantilists and the bankers. We're behaving ourselves now. We want to be nice and kind. We are tapping into the universal wisdom of the subconscious mind of the entire people and planet. We are transcending the people that wage vicious wars. We will not name them. We will not shame them. We will just refer to them as they, the bankers, the mercantilist classes. That's what we will do. And they are in a situation where they typically never seek to make you rich. But everybody here tells you, wake up and 6x, 40,000, 150,000. Many of these people I like and respect, by the way. But the temptation to do hopium, who's this guy? Moonboy Dealers, Reval Fever. He's the only one. He stands alone saying, get off your hopium horse. They're not in the business of making you rich. They find a way. They find a way to fix their cheating lies and ensure that you pay for it. That's right. That's what they've always done. That's why we've spoken of inflation of intent, pushing up the costs of foods and essentials, pushing up everything to debase everything else, and getting the price to trade up, and maybe doing mark-to-market revals on a regular basis, and coming with capital gains, preferably unrealized ones, to levy on you because you stayed at the same country, you have the same passport and the same bank with, so they've got you by the you know what, squeezy, that kind of bit, so that you stump up and you're forced to sell your gold to meet those unrealized capital gains. Yes, my friends, they will get you out. In one way or another, they will make you pay. So there is an absolute litany of gold reval videos, 15, 20, 40, 150. Choose your number. Either way, you're getting rich, and government's going to make you rich by decree. You, the libertarian, you, the sound money person, the people they obviously loathe by being unsound in money in every way. They are going to make you rich. Tell me when you feel that don't sound right. When has YouTube ever been right where the largest of all bullion producers of any form of content, including many people I like, there's Matthew, there is Everett Clive, there is Andy, there is everybody is calling it. Why? Because Besson stated it's time to reval the balance sheet. Now, remember, they want you in digital assets. They want to reval the digital assets. That's what I think they're going to do. They will capital gains tax you on an unrealized basis. There's no way they can allow you to be beneficiary of something they do. Recognize that. They loathe you most for being of sound money and not participating in their Ponzi-onomics. Because that way they don't get to control you. So they need to teach you a lesson for your independent mindedness. And that isn't a lesson in how we make you rich as government. That I can assure you. Anyway, back. We're having too much fun. Back to the gold. Now, we were talking about this and saying this goes up. At what level do we accept we're wrong and this turns into a breakout to the upside? We do have a level. In fact, it can happen. And when we drop to the weekly time frame, we feel more like it could happen. You see that? There is still a squeezing in the volatility. It can happen. And we acknowledge that. So, whilst the monthly looks slightly bearish and has a nasty little old pattern about it, this looks better. But I do want to highlight that's a steep grind under there. The candle bodies went higher in the middle than here. This was a very temporary wick. We want to remind you also that when we did this, we had called for 2,900 and 3,000 as the key targets. This was over performance. When we dropped down to the daily time frame, we were getting the correction that we sought that should happen after overperformance. You were as high as 3,167 and you started a correction. But Donald Trump came. Donald Trump came and started more fights with more nations than anyone has ever done and created so much attention on the dollar debt market that people sold off the debt markets. The rate spiked, the debt crashed, and gold got a super surge. Hence why we say localized high. How long? I don't know. But are we really going to move straight up? Well, at 3,440, if we break that, we'll accept we are now back on the upside train again. At 3,440, we'll accept we are back on the upside train again. We need to see that fall. That's right. We need to see that fall. Let's go back to the weekly time frame and show you those kettle drumsticks one more time. But When you made those targets, this was a blow off, and I'm going to show you another chart of gold in a different fiat to highlight that. So that 3440, if we break that to the upside, we will prepare to see further gains to the upside as we were originally seeing when it started this move before that huge rejection coming into the end of July, when we were running around Hyde Park as happy as clams, only to find the rejection was vast and deep and severe. So that's where we're wrong. That's where we trade up. In the meantime, our suspicion is it's possible that you could churn. It doesn't mean bearish. It might mean a little bit bearish. It doesn't mean it has to be super bearish. You can stay in this range and churn and tighten and bottom and come back up. That is not a crisis for any long-term investor. It just isn't. It isn't bad news per se. It just means don't assume you're making new highs too soon. And for that reason, I turn to the Swiss franc and I say gold to the Swiss franc. Again, a major move, two significant targets were made. The up leg to here that got projected from the lows to here brought a target of 2583, 2,580 Swiss francs. The subsequent consolidation for an extended period that we were watching on here brought about a single-minded, clear-cut channel to the upside that you broke down through and are currently revisiting. We will drop down to show you that again. We'll make the same point on the other dollar side as well. This was violently up. This is an incredible ascent. You don't always go up at that rate in much the similar way that this was equally good to the upside. You get consolidation before you make new highs. Let's have a look at that. Again, let's take the eye off, the eye of the tiger, hide all our lines, and you will see that that lower basing ascending grind line was broken, and this is a return move by those 2 months in what is an upside channel against the Swiss franc. Please understand, for gold to be seriously bullish, it needs to be bullish across all fiats. It is the superior category even to the best of fiats. This is pointing to sideways possible pullbacks and delays before new highs in my assessment on balance of probabilities. This is not a structure that points to immediate upside. Let's have a little look on the monthly a little bit closer. When you put that basing ascending grind line back on, and you see the rejection candle that broke it. This is a return move, again with a 50% sell-off, and this one has a 60% sell-off. On a return move to a break of a basing ascending grind line, which is the lower atomic component of a channel with a beautiful splitter that shows you your gradient of ascent that you had during a particularly bullish period. You don't always go up at that rate. It's just how things work. That's right, friends. You've had a massive upside reval, and this, the gold versus the Swiss franc has made two separate massive targets, much like the gold against the dollar. And if we do the same channel draw for you on the monthly, you will see that too in terms of the gradient here. There she goes, there she goes, there she goes. Let's get it drawn correctly. This too clearly popped out the top with that surge and is now squaring up through this channel and may, if it gets rejected again, end up breaking the basing ascending grind line of the upside trend there. In short, overperformance begets future underperformance in markets. A sudden blow off to the upside can lead to underperformance period later. Then we turn to the USD Swiss franc, the USD Swiss franc. Where are we on that? We've done the inverted HVF on this USD Swiss franc many times on this channel. hasn't been covered in quite some time. This is a big macro. You have to be super patient, and it's lengthy and it's long. But interestingly, when we draw it, you can see the high 1, the high 2, and the high 3. The low 1, the low 2, and the low 3. Of course, that was during the period of the super spike of the Swiss franc, which we called on the breakdown of the Greek crisis 2009 and the subsequent break of the 2015 floor that they had instituted with the euro Swiss franc as well. Bear that in mind. We are predictors technically of single digit oil from 67, and of course the turn when no one else was talking about it and saying buy bonds. We are the uncomfortable trade callers. If it hurts to say it and it makes you seem wacky, we are the most prepared to say it. On our first and only call in the bond markets, we called the end of the 40-year bull market in the late stages of 2020, 3 years before anyone else consistently started speaking about that. We have been saying that the Swiss franc is going to dominate the dollar for an extended period. Most people know that the Swissy is less bad than the dollar, but they didn't have the technical break. That was a break. This was a broadening structure, ever deeper sell-offs with rallies, and then smash to your second interim, which actually suggests that for a spell, the dollar might stop being the weakest currency in the lot and rally against the currencies that have actually been outperforming it. So you've just made second interim. What does that mean? It's not full target. It is an area where progress will slow, potentially go counter to the expected move. Time will elapse. Progress decay. That means no new profits, possible take back of existing profits, and all time being gobbled up, which is important if you're an option trader. However, the long-term downside target of 63 cents, Swiss franc cents to a dollar, don't forget this entire structure formed at 1, the key round number. That saw you get that squeezy, that absolutely capitulated down to there, which, as I said, started in 2009. You'll see the interaction in 08 into 09 over here, which led to the Greek crisis. We saw the strength in the Swiss franc across the board, particularly against the euro when that happened. And that was, of course, all part and parcel of the subprime crash. It was the biggest FX move between major currencies. We were there and calling it and trading it. Now you are trading again against the dollar for the Swiss franc, and our assertion is 63 will happen. However, at an interim target, it's quite possible that you are going to get a relative moment of strength in the dollar for a while before it sets up maybe again for a downside move. Once you let go of the second interim, it will be brutal and quick. The open territory is covered fast by the cavalry. There's no fences to jump. That's how it works in HVF method. So we are winding up for a seminal event that will see capitulation in the dollar. And at that moment, not only will the Swiss franc be firming against the dollar, but your gold will be going gangbusters. In the meantime, you are sitting in a period of progress decay according to currency, according to gold to the Swiss franc, according to gold to the dollar. It is not yet ready, but it will come. And you need to be patient. Those that are calling max reval today tells me that it's not happening today. Max reval in the week or the month ahead, it tells me it's probably not in the week or the month ahead. Let me say this. The insiders are trading against you. They are all trading Palantir. They traded Apple. Nancy Pelosi is worth $432 million. She's outperformed Warren Buffett in the last 10 years. Her banker, we only use the word banker now, her banker mercantilist husband seems to be very good at putting option trades on for her. Yes, and they are getting very rich. they're getting very rich, and they're insiders. The insiders do not show me that gold's about a moon. The volume does not show me gold's about a moon. Gold trading off on a CPI report does not show me that the insiders are pitching up to make money on the moon. And believe you me, if they're in Drumpf and Trump token when it's about to get a pump, if they're in Palantir as it's about to get awarded a government contract, they will be moving into gold before it gets any form of mark to market, or God forbid a Reval at multiple X's that blows up all the banks and the derivative markets. Rest assured you will see it technically. We are not seeing it technically. That is my take. That is the assessment on the currency market, USD Swiss franc. It is the gold Swiss franc assessment, which shows you that in actual fact you are in a broadening structure, easing. Did I cover that? I didn't drop down on that time frame to show you. So where are we on that time frame? Let's just show you. We don't want you to hide the drawings. There's the target make. You are in generally a macro continuation at some point when that line be broken. But for now, you are breaking that in a channel and you broke to the downside. That's your broadening structure. This is the one we eventually expect to win. Hey, it could come down here and turn real quick and break. That's possible. But that would still be some time from now. As I've drawn it, it would be right at the end of August. That would be the quickest route. It could also break down from here and bounce on the splitter like that, and even make a visit to the other side. There's a couple of options here, all of which, in the end, we expect it to continue here. But for now, it is selling off, and we think that that level, much like that level, is likely to fall. We talk about three clear selling waves. There's a first, there's a second, we expect a third. It could go all the way to the downside. You could visit below those two targets that were so beautifully confluenced as you did here. Don't forget, falling wedge. That set up the bounce for the near all-time high. There's your volatility of the Trump trade tariffs, and here is your structure. Down first before up is our best guess. We don't think you're going to turn straight around and be straight away to the races on the gold Swiss franc, although longer, medium term, and even moderate term, we do see this being broken to the upside. We just think you sell off first a little bit. How far? We don't know. We don't know. But that flag broke down as it should. Everything did as it should. The market is trading off today, yesterday, and that does not point to an immediate reval with a 4x or 5x. The insiders would be all over this. And yes, they would move the market in much the same way they've traded the currency markets, the equity markets, and the Trump crypto markets, all to benefit themselves. Until next time, I look forward to updating you. You too can build wealth. Oh, by the way, equity, let's show you one miner. We're doing a lot of work in the mining space. Let's get rid of our drawing. 219 is the next point of rest, but let me also just highlight that Agnico is actually also just run a second interim, very low vol, very steady climber, beautiful squeezy in our funnel. So that's a squeeze within a squeeze. This is the monthly chart of Agnico Eagle Mining, by the way, monthly. And we are calling for a 219 target. This would be the perfect place after a second interim run. Isn't it interesting? You're at the second interim on the downside, USD Swiss franc, that could point to a little bit of a rally on the dollar. Not for long, not super strong, not forever. You're at a second interim on a gold mining company, and you're potentially at a localized high after making the 3.5. You haven't yet given up ground. And on the gold Swiss franc, you've recently made targets as well, meaning you could go sideways, a little bit of a churn, a little bit of a rest. Nothing to be scared of for the long haul, but you could quite safely see a pause here. How does silver and platinum look? You know, our favorites that we're also talking about. A pause here before running the 219. Well, let's go and have a quick fire look at the other metals. So that's gold, by the way, against the NASDAQ. And you did just run all the way. Interesting little relative valuation assessment. Flag, note the flag, you made that target, by the way, in record time. See that flag and you see that interaction with that neckline at 0.21. That's gold price divided by the NASDAQ. You see this big old head here? Well, you just made it up to that neckline again and you sold off. The NASDAQ is in a point where it is currently outperforming gold on the last 1, 2, 3, 4 candles. 4 candles, monthly candles. Over the last 4 monthly candles, you pull back down. You were gaining. You had a nice little squeeze that got you up there. But now you might be making that right shoulder that you need to come back around before triggering here. Then we will move much higher in relative valuation as part of the turn. Here's where you once were in 2011. So the NASDAQ has been winning since 2011 against gold. There's no getting around that. Gold divided by the NASDAQ. However, you are at funnel support here. So I would expect a little dip in here, a little base, and a rejection at some point, which is perfect for giving the right shoulder. We are just not there yet. Your great trade is coming potentially. That's just an opinion. It's not advice. We are not regulated to advise anybody. This is me talking about my expectations and predictions in this particular market. Let's have a look at platinum. This is a pullback, quite a violent one that took you back past a key level. What was that key level in platinum, you say? Well, let's show you. This is the key level of platinum. This has been a falling wedge for an extended period. That was a base of support over here. You have right here on platinum a massive interaction, and then you have another glute cheek and another interaction with a little bit of a pullback. So we think that's a W bottom that sees you also run through 3177, and far bigger numbers. You can get those when you join our community. We have highlighted that at minimum we expect a 400% move from the platinum. Of course, this lovely little upside HVF over there, that's squeezy. Let's draw it again nicely with the straight lines. That squeezy broke very powerfully and is currently at second interim. You see that? Isn't it beautiful how the geometry all measures up? That's at second interim. Let's show it to you. As a reminder, it made its second interim and has had a little bit of a pullback phase. Let's show you that as to why we say that. So you can see these confluences. Those areas also represent that neckline for a W bottom, for which that was an interaction. Let's show you those confluences. Where's the second interim you talk about? This is the value of HVF method, friends. A real map for drawing. Let's get rid of some of those. You can disappear and you must stop being silly. There we go. Let's have a look at that draw. Where's the second interim? There's the target for that structure, 1615. Bear in mind the double bottom has already shown you 3000, so you will rest there, but you'll end up going further. And where's the dotted line? You see that dashed line starting there, running all the way through. Isn't it interesting that on neckline for a W bottom that was a localized high here, which was the high one, is also the second interim for an upside HVF that was clearly confirmed on a triggering event there, that we actually were entering long there and even had entries sub $1,000 at 900. Yes, so of course this has been a pullback. It was key level run, it was second interim run, you're awaiting a target. So it isn't far away, but is it now? Is it now? That is a weak little roly rally. You could come back down a second time. This is getting rejected regularly at the interim and the neckline. You can see the tall wicks. You've got a bit of stuff around time, basically, to eat. There is no invitation to get leverage long. This is where you should be on balance of probabilities. I will say double zero cost averaging in monthly into this amazing metal, which I consider to be cheap gold, which will eventually be valued higher than gold, is harder than gold, doesn't tarnish like silver, and significantly rarer than both gold and silver put together. And with the suppression of the palladium substitution that occurred for a decade and a half, is hyper undervalued relative to all the other precious metals, and is well sought out by the Eastern markets that actually like the equivalent of a white gold color, only rarer. That will look just like silver when everyone is snatching gold chains, and actually fly under the radar while being harder, denser and rarer. Only thing it has never been is a monetized metal, because it is so scarce and so recent. Not for any other reason. It was only discovered in the last few hundred years. Gold has been discovered and around for a far longer time. So platinum is emperor's money, the modern emperor's money, and it is sought out and can be bought without VAT if you're not in the European zone. Anyway, you can find out more about that. Book a call, grab a link. HVF method, building wealth in reset times, protecting and preserving that wealth, securing optionality in this environment where unrealized capital gains are a real potential attack vector against any money you make. Book a call on the link below to build your wealth, protect it, and secure freedom of optionality and places to go and places to bank and zero capital gains environments. Non-advisory. This is just what we're doing for ourselves. So that's platinum. What about silver, you say? Silver, silver, silver. Well, you can see there is platinum, little falling wedge, that a rising wedge that had a dip down. There was a little head and shoulder on the shorter time frame, by the way. We've also drawn that on lesser time frames. You can see it squeezing out like that. Proper break. 1402, target made, rising wedge, proper break again. Now it's not bad. It's gone down, gone a little bit up. But if gold goes down, it will be dragged down a little bit as well. What about silver? What about silver? Silver. Silver and gold, they said. Silver XAG, our second favorite of them all. Our second favorite indeed. The real little head and shoulder there. Target, flag, target, down, dip. Rally back up, bouncing off the key level of 37.6 as well. Both these looking more than okay. Firming up a little bit, can go around. The big problem they have is they need this guy to not be too bearish. And we've had an interesting spell here. We expected this grind, this broadening grind on this case to open lower, and it did on the Sunday evening after a squirt up on the Swiss 1 kilo non-story. Oh dearie me. And the subsequent churn is roughly here. We need to see what gold does. As I've already said, the 3,440 will be where we accept that it's trading up, and you might just get a longer period to the downside. That may also have a leagues and lags effect on platinum. The amazing thing, seeing as we're doing metals, that I get out of people is they say platinum has improved its story, but silver is the great bull. There's quite a bit of that out there. So let's show you the gold and silver ratio. And then we'll show you the gold and platinum ratio. And then we'll show you the platinum and silver ratio. How about that? Cross-market analysis is fun. That is downside generally, which is marginally better performance from silver. But we did stop going down a little bit with that wick. A little bit of a hammer trade. We might test it again. We're going to see. You see a little push up there and then a little bit of dip. It seems like it's found an uncomfortable staging point somewhere between 85 and 90. And that's where we are largely at. Difficult to put a technical read on that in any great way. We've highlighted how you regularly reject at 90. Well, you went up to 90 and you rejected again, but occasionally you push well through it as well, as we've seen before as well. So a little bit of nothing, difficult to call. That's at 90, by the way, and the history is 8, 7, 12, 15, long ago history. So XAU, XPT, so that's platinum divide gold, and what you'll see is you're not seeing a full cycle. You're seeing half a cycle of extreme once platinum dominance, where it was 5.5 ounces, into the financialization of everything, fiat, the 70s period, the weighting in gold, and then the great substitution of platinum for palladium. And one of the things many people don't look at is the platinum group. So during this period that platinum was losing value and falling to an all-time relative low, palladium was chronically outperforming gold, and so was rhodium. The platinum group of metals has actually done better than silver when you count them in. We went from a very high percent of the platinum group of metals being platinum, around 74%, to platinum and palladium being virtually equal at around 38 and 34%. And that was as a result of substitution and palladium shooting the moon. So this whole period that is bearish has been very much worked against the primary metal of the platinum group throughout this period. And we are seeing signs of quite a rejection. It's a single quarter, by the way, which is resting at the moment. But we are seeing signs that the potential to overperform gold, and certainly to overperform silver in due course, which many reject. Many will reject because silver has a smaller value, they'll say. How can you do a higher percentage than silver, they will say. Because your net value is higher, they will argue. And this is the technicals of that chart. There's the substitution error of platinum. So this is platinum divided by silver. This is peak platinum to silver, January 03. You needed nigh on 160, not quite, but nigh on 160 ounces. You are overvalued. So we are not platinum bulls for the love of it. You are overvalued. You should sell platinum for silver at any point around 100. This is log scaled, by the way. The midpoint is 70. The bottom of the range is 40. You buy an ounce of platinum with 40 ounces of silver. Way too cheap. 80 tons. 80 tons of platinum is mined a year. That's right, you heard me right. Versus, I think, 3,000 plus of gold. 80 tons. 16 times less than gold, which is about 8 times less than silver. So multiply that out. 80 and 60 is 100 and 8 times 6 is 48. It's 128. That deserves 128 multiple by weighting. And what? You buy an ounce of platinum with 35 ounces of silver. You should be dumping every ounce of silver for platinum. How's that going to cause outrage on the silver stackers? I'm a silver stacker, by the way. I'm a silver stacker. Go hate below. Go hate below. That's your chart. 40 is extreme lows. It was rejected violently when it hit a ridiculous number back here, subsequently to hit nigh on 160. You've been at 125. You came in at 125. This deserves and has regularly been in the median point is 70 of this range. So let's just do that for you and delog that so that you can see it. Can you see that now? Of course, the falling wedge doesn't look like a falling wedge anymore. That 70 is the median price range of quite a volatile mover between it. And I'm here to tell you that since then, through to here, was platinum being substituted with palladium. The substitution error for the green agenda. Southern Africa, Zimbabwe and South Africa, 74% of the platinum market. Russia will be between 11 and 15% of what's left. There's no platinum out there, friends. There's no platinum out there. It has unique uses. Unique uses. This is the level of overvaluation above 100. I'd certainly sell at 125 plus. The accumulation hereof, any number below 60 represents, in my opinion, unbelievable value. Unbelievable value. Which is not to say silver's not going up. I just think in percentage terms, platinum goes up more. Platinum goes up more than gold. It turns out more expensive than gold at the end of this cycle, in my opinion. There is, oh, we forgot about this. Check out the following, gent, if you're interested in plat. Following gentleman. Monsieur Jensen, David Jensen. The London Platinum Market and Vault. The withdrawal of 0.3 million ounces. Understand how small and thin this number is. And when this thing moves, it goes mental. It's thin. New York CME COMEX wallets. Bars from London vaults. None. London lease rates surged to a peak of 44% as delivery was demanded by cash contract holders, and the delivery to New York vaults was only possible with the drawdown of 0.35 million ounces of platinum from exchange traded fund vaults. They didn't have it. This implies that almost no liquid supply of platinum in London or Europe is apparently available for delivery. While the London platinum and palladium markets publish no data on the platinum, and no wonder they publish, keep it stum out there. We ain't got any. We painted some bricks silver. US platinum markets and vault stocks. The lack of platinum in London European vaults also presents serious problem for the New York and Chicago Mercantile Exchange COMEX platinum market. At August the 8th, 2025, New York held 0.241 million ounces. That means 241,000 ounces, friends. 241,000 ounces of platinum in the registered category available for delivery against 4 million ounces of claims in the futures market. So you've got less than 250,000 for 4 million. That's 16 times unable to deliver. Typically, bullion banks in the COMEX market have shorted precious metals. They sold claims in the market but offset these contracts that they've sold in New York by going long contracts for physical metal delivery in the London market, which we've already told you has none. However, you will have to watch. There appears to be next to no metal, yes, as they've already stated. That is an interesting story. Maybe give our friend David Jensen a follow. Okay, we've given you an update on metals. We can always be wrong. We are ostensibly bulls on gold. We are just highlighting that pullbacks are possible. You're seeing a relative overperformance on the NASDAQ here. You're probably going to see the same on the S&P. There is the Swiss Franc. Gold market probably going to revisit to the downside. Only when we break this level will we start to expect continuation. When we break 3440 on the dollar market, do we expect further continuation? That is our update for you on precious metals. Careful, it's not an aggressively trading market to the long side, is my opinion in terms of what I will do. You will do whatever you will choose to do. You will contact your advisor with a clipboard and a certificate, I'm sure. And that is not me. I have none of such things. So there you go. I hope you've been entertained, and we'll talk to you later. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.